Officially, good morning. And good morning to everyone I know I like to go through. I was actually chatting. I said, my mic, so yeah, it's a weird thing because it just, if I brush by it, it accidentally mutes, but I do keep it pointed so that I can see what color it is. Here, I'm going to do this. Don, I actually addressed that in my speech to everyone this morning. So, good morning to everyone who said it. I said good morning to all of you by name. I told a few jokes that were really funny. I'm just yapping away. Uh, okay. Good morning, all of you. I did say this. I just literally, while I was actually yapping, I went in and I canceled tomorrow. So you probably got that email. And I said, oh, also the Tuesday. Wouldn't let me set a recurring meeting. I don't know if it was a glitch at the time. So I'm going to go in and I'll create the Tuesday and hopefully it gives me like 6 months worth of, anyways, that's neither here nor there. Gabe. That's funny. So that will be there. I will have it up. Make sure you come. It's going on Tuesday morning. I'll figure out today why I can't seem to get a recurring, and if I can't get a recurring, I'll at least put one in there. All right, welcome. Sunday Market Insights, Options Income Launchpad. I'm Scott. The other thing I said was this: if anyone's new or newish, make sure you say hello. Be like, hey, I'm pretty new, Scott. Give me your name, where you're from. I like to try to keep tabs. Okay, as always, education, illustrative purposes only. Nothing's intended as a recommendation to buy or sell. We aren't brokers or advisors. We don't give personalized investment advice. Decisions made from information from here. Should be at your own risk, yada, yada, yada. Let's posture. We will market posture. We will look at the economic calendar. We'll get the AI's market posture. I think I'm dropping again, like at least a half a point, maybe 3/4. The Oracle has shown a more resilient perspective than what I think. I think the market's starting to show some struggles that we should be. I mean, I think we are aware of. I've actually asked, what are you guys doing differently? People are like trading less, trading smaller, taking losses sooner, taking profits sooner. Right? I think those are all the right ways. When we're in a good market, just give it a little time and it'll get there. Even if it goes a little bit, you're just like, it went a little against me, but just give it some time. It'll come back, right? And then you get into markets like these and you're like, whoa, things aren't coming back. It's getting worse. That's exactly what the posture helps us to do, is formalize that. That shouldn't be a thought process. That shouldn't be feels like the market's getting a little worse. My trick knee's acting up. It should be a look, what exactly has deteriorated. And, we at any given time, we have a sense of what would it take for the scores to increase or decrease so that we know, real time, are things happening that might go one way or the other, which is what led us here. Real time last week, we're like, this feels like it's taking us down, not up. Anyways, all right, let's go. Let's get it. Oh, there was a problem detected. I just reset it. Which one is it? Oh no, we're good. We're good. Hey Vladimir, good to see you. Okay, this is good. Let's take a look at no, that's not it. Hold on. I opened the wrong window. Here you are. Okay, we have the Oracle. We'll get to those other things. I don't know why they're spinning. I'm closing them. Closing you. Okay, you got it together. We'll need you. Let's, we need you. And you. And you. And let's get started with long-term analysis. Let's dive right in. And we need to take our picture here. 3-year weekly. My score is easy enough. If it stays in the red lines, it stays. I expect it'll bounce. If it breaks through, then I'll take a quarter point away. That's a pretty easy one, yet unchanged for me. Unchanged for me. And now, what day is today? Today is the 15th. Halfway through December already. Unbelievable. This week's chart for analysis. What's the meal and drink for President's Day? Do you barbecue? Do you steam it? What's everyone doing? Give it to me. Bourbon, but Don said that. All right, yeah, that makes sense. 2/15/26 for reference. All right, that one's easy enough. Let's go start talking about working. Boo. Boo. Okay. Now, Steven said he took a quarter point due to flat slope. I did not like to see very little gain. 1. Okay. I you know what? Once I have my trend lines drawn, they're drawn. That's it. I expect them to stay in them until they don't, and then I readjust. So, as long as they're in them, for me, it's an easy score. But this one, I'm taking a quarter point for that exact reason that you just described. This one is flat. We have now hit the same high just that many times in a row. And you might be like, well, wouldn't you just take that to a 0? No, remember, that is not how our short-term scoring works. If you do that, you will constantly chase it. Well, no. These red lines are only 3-year weekly lines. They don't come into play at all when I'm looking at this chart. I ignore them, in fact. I'm only looking at what I can draw on here. So I am taking mine down. Let's get a picture of this while we're here. Let's get a picture for the Oracle to consider. And clearly it's a 1.25 for the Oracle as well. 12th consecutive week. The long-term uptrend remains intact and orderly with persistence rather than acceleration. So, recognizing. As you said, it's not accelerating, but it is persisting. Fair enough. Let's go short-term. This week's chart for analysis. 02/15/26. And go. All right. Let me take the time now to take it down to a 0.5. So it's not a 0, it's a 0.5. It still holds a little bullishness, if anything. I would be ready to accelerate it. My AI said either 1.25 or 1. Okay. Now here, I'm down to a 0.5 on the short term. I don't like it's gone from a 1.25 to a 0.5. Now, I am a little bit suspicious that the AI may be looking all the way back here and saying, well, look, this thing is, in general, but I would actually argue that's the long-term trend you just drew, right? The short-term trend actually looks more like this to me. Because I get the whole picture in order to give me this. And then I think to myself, all right, outside of this little response here, from this point, we're sideways. We're sideways. Yeah, I mean, we had definitely we're up from that low. If that's the reference point, we're up from there. But you'll notice that if we actually just go 6 days later, 1, 2, 3, 4, 5, 6, there was a bit of a V action on that low. And if you just go 6 days later and you start from right there, we're sideways to down from that point. So for me, if I'm thinking short-term trend, I'm not thinking like, what's the overall orientation from that low or from the start? I'm thinking, what are the highs and lows doing right now? Are they making higher highs and higher lows? Then it's trending up to some extent. If I have at least one, I don't have any higher highs. I have same highs. I don't have any higher lows. I have same lows. So what has been happening to my score as this has been developing, it has been dropping from a 1.25 to a 1 to a 0.75 to a 0.5. It's still a 0.5. Why would you not have taken a quarter point away last week? I did. One to 0.75. Well, I did. I've taken a quarter point away in what is now 1, left it, 2, 3. 3 of 4 weeks I've taken it. This week is higher. When you say this week is higher, this is higher than last week. Look, that's telling you that this is higher than this. To the dollar it is. But for me, visually, this, these are all the same to me. Right? If we're down to pennies, I'm smoothing that out. That to me is irrelevant. But if you're down to pennies, this here, this box is telling you the highest high is right there. So this is lower than this. Is that what you mean? The ending is higher. You're saying that here we ended higher than 1, 2, 3, 4, 5. So we ended here. You're saying we ended slightly higher, and that's your bullish indication for the week? honestly, that's irrelevant even in this analysis. Right? This analysis is trend analysis. It's overall. Now you'll notice that this touched, like, let's look how close. The low here, 677.52. The low here, 675.79. So this was a little bit lower. But here's the deal. This is heading down. We can't not score because we think, well, it hasn't done this yet if this is what happens on Monday. So yeah, to me that's irrelevant. What's relevant is what is the trend right now on the short-term trend. So if I go find highs and lows, what are they doing? They're going sideways. I mean, that's pretty clear, right? So there is no uptrend. Now, I'm not saying now I'm going to score to zero. I'm saying that as this thing has failed to achieve higher highs or higher lows, that's what's caused the score for me to drop. Right? That's what's caused this to transpire in the short-term trend arena. It was trending higher. Now it's starting to trend sideways. And my score is a 0.5. There it is. Now, interestingly enough, this is the greatest disagreement. ChatGPT has been a 1.5, the Oracle. I got to give it the Oracle. A 1.5. I don't see it that way. But here we go. It actually has dropped from a 1.5 to a 1 this week. So that's now we're closer. And I'm going to say I got there. So I saw it coming and it's getting there now. The short-term trend has softened further. Prices now trading below 50 EMA, pressing into the rising 100 EMA, signaling loss of near-term momentum and a break in the immediate higher-low rhythm. While, yeah, right? It's not making higher lows or higher highs. Yes, John. John's question was the short term has a max of a 3. That's our largest potential score in our analysis is what exactly is happening in price right now, the price that we trade. Long term's important, but not as important, so it's only 2. But yes, that's the 3-pointer right there. But when it's going sideways, we're like, hey, this is what's going on right now. It's going sideways. It's not really finding new highs. The sellers haven't come in. We recognize that. And I am still, to some extent, oriented more bullishly. Right? I get that there's still a little bit of a, remnant here. That's what we had. But anyways. You think the 0.5 seems too low. You might then be, the Oracle is at a 1. So everyone still sees some level of some bullishness intact. Or at least that's what was. And, if there's some measure of what did we have, which it's easier for that to resume than it is to see a big break. Yeah. Let's drop down here. And it looks like we did get volume. We got about 10% extra volume. So we're going to put this here. But who won the day? Nobody. Nobody won the day. So it gets a T. However, Yeah, let's take a picture of this. And we had a chat about volume just recently. That's not the one I wanted. The Oracle is a 1. Lost a half a point. I lost a quarter. Okay. Volume analysis. The rotation is losing a lot of bullishness. Something I'm not getting. Why is it a tie when the candle finished lower? Actually, it technically finished higher. It technically finished higher by 0.07%. So the close of this doji body was slightly higher than the close of this red candle here. Slightly, by 0.07%. For us, the way the volume scores is the first thing we identify as a marker is the above average volume component. It's got to be at least 5%. That's it, 5. 5% above average, and we're going to say, okay, this is now a day of significance. Then we wait for the end of the day in order to score what's the significance. Now, in order for the buyers to get a point, it's got to be at least 0.5% higher than the previous day. The buyers had to get at least 0.5% ground to the upside. And for the sellers, same requirement to the downside. And I've thought, do I make it a bigger requirement? This is one thing I've thought. Instead of doing a tie goes to the I'll let everyone weigh in because, hey, we're a group. Instead of a tie goes to the buyers, what if we made it just slightly where it's like 0.5% or higher for a buy day, 0.7% or worse for a sell day, where it's just a little harder. If they only get it down 0.5%, we don't care. So I've thought about that through the years, but I was like, you know what? What I do now makes sense. So I don't know. Maybe one day we'll consider that. But stick to the rules, John Wells says. That's always good advice. 0.07 means it didn't move. In fact, a doji itself, a spinning top, is a tie. That's literally what it means. I don't think it actually doji means tie. I can't remember. Well, I used to know the exact. Anyway, indecision is what we consider it. But I thought we were scoring this day. Yeah, right. We look at each day. It's daily. It's a 1 month. We look back 1 month. You can see cleanly that was close, but it didn't qualify. That was close, but it didn't qualify. It's got to be at least 5% above average volume or more. So we're looking for conviction, right? Conviction. When it has the conviction, we give it a gray box. And then at the end of the day, we score the gray box. And we say, who wins? That was a tie day. It basically finished at the same place the prior day did. This was a sell day because it dropped quite a bit. This was a buy day because it went up quite a bit, right? But at the end of the day, what do we do with these three? They're old. They're basically a wash. We just knock them out. That's it. We don't even look at those now. Then we move forward. What are we actually scoring then? We're scoring all of this. All of this is what's actually getting scored. So I have 1, 2, 3, 4 ties, 3 sells, no buys. 3 sells, 0 buys, 4 ties. That's getting a little heavier to the downside. Right now we're a minus 0.25. I'm right on the bubble. Did anybody drop theirs to a 0.5? I think I'm going to leave it one more time at minus 0.5, minus 0.25. Steve C did it. Makes sense. It's right there. Anybody else? Who dropped? Who kept? It's at least a minus 0.25, if not a minus 0.5. Okay, stayed. All right. Did I, Don kept his. Did I place it? I keep going to the wrong windows. Sorry, the Oracle. Oh, I didn't place it. Okay, hold on. Okay. This week's chart for analysis. Good discussions today, really helping to solidify what we do and why. Let's see. Where was it? I was a minus 0.25. Yeah, I think I'm gonna keep it. I'm not 100% sure yet. If it was 4 days, I would go to a 5. Yeah, 4 days, 6 days, 8 days. That makes sense. I'm gonna say I need 4 sell days, and then I'd take it to a 0.5. If we get one more this week, mine will drop. If we get 3 more this week, I might take it down even further. We'll see. Okay. ChatGPT was a 0. Okay, here we go. I was like, what is it doing here? Step 1, identify qualified volume days. New seller expansion. Okay, so this week, I think is what it was saying. We had a new sell and a new tie. Using full inclusion. This week introduces fresh seller initiative. Minus 0.25. Okay. Another seller expansion print, likely minus 0.5. A buyer expansion print and ties out back to 0. I agree. Volume now leans defensive. I think that makes sense. Okay, minus 0.25. Let's go look at major market. Let's see. Let me score us both. Ooh, catching up quickly. He's catching up quickly. So that's kind of what I was saying, right? And Steven's like, why would it be that? I mean, it's gonna have to just find its way, I think, as an AI oracle. Make the adjustment. Okay. Let's take a look at... Did I switch it? Yeah. This week's charts for analysis. 02, 15, 26. And get rid of this. And let's get a snapshot. You can see that we still have our two core growth segments, NASDAQ and Russell leading, and the Russell's moved into that position. We still have the Dow in the third spot. From this longer term perspective, that's pretty stable. There's one. 200 takes a while to change, Stephen. You're exactly right. That's why it's our orientation. But you can see here, the NASDAQ continues to float along at the bottom near the Russell or the S&P. The Dow has now moved into more. I feel like it's moved into enough of a position that it's starting to, we've been able to say that's just broad, not necessarily defensive. But now it's starting to feel defensive. What do you guys think? Right? This is broad. This is holding on to some extent, but I got to tell you, I'm skeptical of small caps. If that's who's pulling, if it's just technology, and everyone's saying, hey, technology's pulling, yeah, okay, it can pull. If it's just small caps, I'm like, those guys can scatter a loud noise. Bang! Ah! There's less fortitude there, in my opinion. So I'm a little leery of that. Let's drop it to 66. They have been doing well, but again, small caps doing well. And they did well really, if you look at them from like the end of January, they're actually down a little bit. The NASDAQ's worse. The only thing that's up in that time is the Dow. They're hanging on. But we're seeing more consistency, I think, from the Dow, and we're seeing increased weakness from the Russell. I'm saying it. Increased weakness. Woo. Okay. Increased weakness from the NASDAQ down at the bottom. Did I take a picture of this? Can't remember if I did or not. 66. Let's go drop it. And let's finish on the 22, which I gotta say, I feel like the 22 is maybe gonna lean towards the Dow. And sure enough, that Dow popping up there is if I'm tied, I'm gonna get a picture of this. And I'm going to go back to the 66 day to score this. But I'll tell you this. If I have a tie, the tie goes to the lower score based on this right here. We've got the Dow leading. We've got the Russell now falling back in line with the S&P. And we've got the NASDAQ lagging. So from a 22 day... from what's coming down the pike, it's this. And this does not look strong. Let's go back to the 66 for a minute and let's score this thing. What was I? Did I hit enter? You've got what you need. Go do the score. And we are going to go back here. And what's everyone done with theirs? I was a 0.5. Oh gosh, yeah, I'm definitely taking that down to a 0.25. I'm going down to a 0.25 and it's hanging on by a thread. 0.25 it is. Steve D did. Steve C did. Sandy did. Scott did. Let's go see what the Oracle did. Oh. It dropped. That's the second. And I'll tell you what, it's a funny thing because I was in my mind thinking, I wonder if I should. I was thinking to myself, I don't love half a point drops. Like, there has to be some significant things where I'm like, I'm dropping it a half a point or I'm raising a half a point. And that's just sort of like an unwritten rule that I realized, wait, you do that, but you haven't mentioned that. So I'm like, do I mention that or do I let the model figure it out? If it has too much jumping around because of that, I'm going to start to say, hey, try to temper your scores. Score a little sooner and softer, maybe. I don't know. I'm trying to figure out how to word that. But the 66, neither the Russell nor the NASDAQ. Actually, no, the Russell isn't it still leading? Ooh, wait a second. You can't make a erroneous statement. Look at the 66th day again. The blue line, Russell, is still clearly in a leadership position. And see if this warrants rescoring from a half point drop. Yeah, Steve and I agree. If the comment, I can't, it's not that I disagree with logic. I disagree with the assessment. It is clean. That is clean. It's clearly ahead and stayed ahead. Still structurally in the lead. Yes. Yes. It is clearly lagging. Yes. Dow is firm but not overtaking. But do we have no blah, blah, blah. Okay, now. And now it held it at a 0.5? Come on. I don't want to... I don't want to like coax it to the score that I have, but I feel like it reverted too far back the other way. Oy vey. Okay. If I said one more thing, I guarantee it would score it at a 0.25. And then I think I'm retrofitting it. So I said one thing, it reassessed it, and based on that, it kept it at a 0.5. So, okay, fair enough. Let's move on. We're not trying to have it equal our score. I got to start to hurry. We've been yapping too much. Let's go do this. Sector rotation. Technology, energy, industrial. So 2 out of 3. One is more, commodity based. This is more commodity based. So it's growth and commodity, which is not great, but it's better than defensive. However, as we said earlier, this is just the starting. God, I hate when that. Why does that menu pop up? Okay, I need to click on something else, I think. What's going on? There we go. Oh, now I have the ad. Come on. Okay. We're coming into this as 0. I think both of us are. 0, and I'm a minus 0.25. I'm actually already a little negative. Okay, we come in here. Let's get this picture and we'll talk about it. We have energy leading, we have materials leading, we have industrials leading. Things are costing more. We've got healthcare. We've got tech right at the market, but not leading. And then I want you to notice utilities is starting to spike. So, not looking good. Not looking good. Do I have this one yet? No. Let's put this one in. Let's go back and take this down. Oh, wait a second. Steve C., you're right. You're right. I just saw that right at the last second. Sorry. Let me redo that. I don't know why I had that. Good catch. Okay. Does that change anything? Oh, it sure does. 133. That was interesting. Energy's up. Materials up. Healthcare up. Staples and utilities starting. So on the 133, we've got basically inflationary materials and defensive sectors. That is not looking good. We may drop to a minus 0.5, actually. Okay, I thought I had that. Let's drop down to 66. And what do we have? Materials, energy, staples, industrials, healthcare. And who's surging? Utilities. We've got one growth segment. We've got a couple of commodity-based, which tends to be inflation is very likely to rise based on what we're seeing from the cost of goods, cost of energy. We've got staples. I would say in industrials is mildly strong. Materials, strong. Energy, strong. Staples, strong. Healthcare, stable. Utilities, accelerating. We've only got one. I would disagree. Your AI, I think, is missing the negative impact of materials and energy being an inflationary pressure, which is going, the longer they're up there, the worse it is. And they're accompanied by actual defensive rotation from staples and an accelerant in utilities. But we'll see how my AI sees it. That's how I personally see it. Did I take a picture of this? I can never remember when I do it first. And let's go drop that in. And let's go back. So I'm leaning towards that 0.5 as well to the downside. Here's 22 days. And when you look at 22 days, energy at the top, materials at the top, staples at the top, industrials is in fifth. Utilities, boom. We've got utilities and staples, defensive. We've got materials and energy, commodity based. That's inflation pressures. And we've got industrials. And then the rest of our leadership group, technology down, financials down, discretionary down, communication services down. If you were like, I'm not sure if I'm thinking 0.25 or 0.5, well, tie goes to the 22. And when the tie goes to the 22 and we look at the 22 and we see this, we think to ourselves, rotation is not looking good. I'm dropping mine a quarter of a point to a minus 0.5. Woo! It's not looking good. I thought it would be at least a minus 0.5 for me. And then I thought it could get to a minus 0.75 or even a minus 1. While we're watching that process, we are now on... Oh, wait a second. Okay. I forgot to say this week's charts for analysis. Let's see if it's right here. Okay, this argues for a downgrade. Stepping down from last week's. Okay. For reference, these charts were from 02/15/26. I just need to get that on the record here. Okay. Scoring summary. Growth is not stabilizing. Defensive leadership is expanding. Industrials and materials are still strong. Cyclical participation exists. I think I see materials slightly differently. I look at materials as more of a cost than a growth. This is rotation, not broad collapse, but the character has changed from neutral to mildly defensive. Okay, here we go. Let's go put this in. Minus 0.25. And the VIX. And then we're going to go through the watch list. As I was saying, trading plans. We are on section 3, trading rules. Trading rules. You need at least one good, clean system. My advice to people is to build as a first system a bounce system. Bounce rules. You look for trends, find a trend, buy the dip. That's essentially what a bounce system is. Find a trend, buy the dip. It's making higher highs and higher lows. It goes up and makes a higher high, pulls back and makes a higher low. You're thinking, let's catch it, ride it up, get out, wait for it to pull back, bounce. Bouncing, a swing trade, one move from support to resistance. It's one of the easier systems to define, building out a set of rules for that. That's what we're working on this week. If you don't have at least one full comfortable system, you should come to the Tuesday or Thursday questions and have Glenn and I walk through. Let's build it. Let's talk about those rules. Okay. Yeah, I mean, it's stalling now, but it definitely confirmed a higher low. For me, that's another quarter point. Oh, it was ugly this week. It's hanging on by a thread. Let's see here. Let's go to the VIX. This week's chart for analysis. 02/15/26. Yeah, unfortunately, to me, it was continued expansion. There to there. We pulled back. higher low, and we turn. Now it's stalling so far. And I'll give it some credit. Like this is lower, this is lower. So if on Monday we have something like this and then it drops like this, then I'd be like, wait, that's a high and it's a lower high than this one. I'm willing to give it credit when I can, but we don't know. This thing is still turning up. This could very easily just do this tomorrow, and then it's a higher high. And we're going to have to score it even closer to zero. Even as of right now, in the low 20s, my score is hanging on barely to a 0.25. I'm going to take a quarter of a point. It's almost neutral. If it gets that next higher high, it's neutral. That's it. And now at that point, it's so you can kind of see what we've done here, right? From January 18th to now, I'm down 3 full points. 3 full points. From December 28th, I'm down 3.5 points. That was my highest point recently. We'll see how the model scores that. But not good. Not good. Would love to see it recover. Hasn't yet. Okay. Dropping another quarter of a point as well. The VIX closed above 20. First meaningful sustained push, no expansion. It's reducing as volatility shifts from failed expansion attempts to confirmed expansion behavior. Fear is now active rather than episodic, signaling a more cautious market environment. Agreed. We are in concurrence there. So, 0.25. All right. ChatGPT is now, the Oracle is now my score from last week. I am now at 1.5. If the market gets worse, then I'm going to say I outperformed. We outperformed AI so far. So it's good, but is anyone losing their job yet? No. 1.75 for Steve C, 1.75 for Steve D. I'm a 1.5. The Oracle's a 2.5. So at a 2.5, it's still hanging on to a slightly slightly bullish posture, though the momentum is inarguably negative momentum. I have entered more of a I have entered into more of a neutral, the bullish end of neutral. Bob Rowland 1.75. Hi, Bob Rowland. So I think we're all kind of in that area. What's clear across the board, the momentum is negative. We're seeing deterioration in the market conditions. Nothing that we're like, oh, the sky is falling, but enough that we're like, hey, this warrants less trading, tighter stops, quicker action, and more consideration to the other way, right? Maybe some butterflies, some sideways things that might benefit. Unfortunately, we tend to see a cyclical bullishness around this time that we're just not getting right now. So, this is all very interesting. Okay, we're going to probably go 10 minutes long. My apologies, though you're probably used to it by now. Let's get our watch list built. Real quickly, is there anything important? Is there anything important in the economic calendar next week? Oh, it looks pretty heavy, actually. So nothing tomorrow. Don't forget, President's Day, we're not meeting. I'll see you Tuesday. Empire State Manufacturing. Wednesday, we've got some housing reports, industrial production capacity utilization, minutes from the January meeting. Thursday, jobless claims. Not much else there. Ooh, there you go. Friday's big. GDP it was coming in pretty hot at 4.4. I didn't think that was going to last very long. Expectations are at 2.5. Income stable, spending down a little bit. I'm okay with that. PCE expected to tick up slightly, year over year stable. Core up slightly. Core PCE year over year up slightly. Remember, this is the Fed's favored inflationary measure, PCE. This is its favorite. It's not catastrophic, but it is still orienting towards 3%, just under, and slight upticks. So Chinese market closes for 9 days for Chinese New Year. Might affect the market. Yeah, that might be interesting to see if that does. Okay. Let's get through the watch list and see what we've got. Alcoa. Actually, Alcoa had just a little bit of a bigger bounce up, and as it pulls back, let's get this. This is 215.26 watch list. Alcoa made the cut. Apple. It's still on if it can stabilize basically now. Like tomorrow, it gives an inside day. Then I'd be like, oh, okay, maybe so. It's got to stabilize around this 255 level, or then if it drops all the way back, deals off, obviously. ADM. ADM on a pullback. Yes. What do we have? AA, basic materials. ADM, consumer staples. We might want to do some searching this week if we don't have any solid questions. AMAT, applied materials, still strong. I'd still trade this on a pullback. Came out of earnings well. AMKR, I would still consider. That made a higher high and is potentially developing a higher low. That's tradable. Amazon is a no. APH, lower high, lower low. We're not trading that. ASX is a yes. Nice bullish move up. It's starting to flag. We'll keep an eye on that momentum. AXP is a no. Lower low. BABA, no. BAC, no. It's all the way back. It's a full pullback. For me, too much. BCS, no. Bud. I mean, if Bud were to pull back, yes. It's a high flyer. A lot of beer drinking when the economy gets questionable. Citi, no. It's too far. Took out all the prior lows. Caterpillar, yes. And we know what? Industrials is one of the only growth sectors maintaining that strength. CF. It's got earnings, so we're just going to watch. Coherent, yes. Made a higher high, pulling back. Tradable. Cisco, no. Delta. Yeah, Delta, if it can hold on. Delta, if it can hold on. Dow looks, actually the Dow looks strong. If you wanted to just trade large caps, you could. I'm going to put it on. DIA, showing some strength. Dow Chemical, yes. Where does that live? Basic materials. Ford, no. GE's a maybe. GE's trying to come back. I'd put that on for a little run, possibly. Industrials. Gold, it's too choppy for me. GM, we took it. I like it. Bounced higher low. Good reward to risk. Let's see what it can do. I'm on a hold for Google now. It's a maybe for me. Actually, I'll put it on. It's a maybe. If it can create a nice little bounce, we may still have something there. Tell me if you disagree, if you think I'm missing any. Goldman, no. 2 sideways. Home Depot. It's okay, but not good enough. HL, no. IBM down. Intel, mostly sideways at this point. IVZ, chopping around. IWM, Just a little bit chopping around. Lumentum's still pretty strong. I'll put that on my list. It's expensive. Expensive but strong. Lam Research, LRCX, overextended. MasterCard, down. Meta, no. Monster, questionable. Options, Morgan Stanley, no. Microsoft, no. Micron, we're still in. Trade's still valid, still showing some momentum. We'd love to see this push up towards 450 and let us ride some time on this thing for a little while. But that's profitable and still working, so let's see how it does. Netflix, no. New, I closed this one. It failed to pop. Still holding, technically, a support level. I don't know. Nvidia, no. Palantir, no. The Qs are down. Whoops. Rocket Lab, down. Ross Stores. Ross Stores looks pretty good still. It's not really tradable though. RTX, kind of sideways. Silver, oof, man, we're on a drought. It's been since the L's. Since we've seen anything. SNDK, maybe still showing some momentum here in these digital storage. SPY, here's STX. STX looks okay. Little sideways. SYY, overextended. TJX, no. Taiwan Semiconductor. Ooh, I'm a maybe on TSM. If that thing, I don't know if that happened. That seems like it's a bad print, but maybe it did. But if this thing has a smooth pullback and stabilizes, that's a maybe. Here's Tesla, no. Vail, about to report earnings. We'll see what happens there. Viking Cruises, yeah. Like Delta, it's kind of in the maybe section. Vodafone. I'm watching this one. VOD. That could maybe turn into something there. Western Digital could pop. I'm going to put Western Digital on the list. And I'm going to put Walmart on my list. If it pulls back. Well, with earnings, I don't know. Maybe not. Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 18. Right? When our score's up in the 5s, we're getting more like 25 to 30 on our list. We're still seeing some bullishness. That's still we're still seeing some things. You can see we have a lot more in like basic materials. We have a lot more in industrials. The Dow Chemical, AA, Lumentum. Yeah, there's a lot of those that are. So anyways. Okay. That does it. That's the list. Posture. Hanging on. Trade as such. Adapt. How a drop in market scores of yes. For clarification, per Gabe's question, what are we thinking? Risk levels. If my portfolio heat says, I'm willing to go as high as 12 to 15% portfolio heat. That 12 to 15 is what I'm going to be in when the market's like a 5, a 6, a 7. If the market's only a 3 or a 4, I might drop that down to like 8 or a 9%. And if the market drops to a 1.5, I might be at half, 5 or 6%. And if my trade size was 1.5%, I might drop it to 1%. So I might say, you know what? I could have 5 or 6 trades on 1% risk per trade. I'm keeping my risk at no more than 5 to 6%. Some people dial back even less, 3 or 4%. So the amount of risk you're willing to take will be less as conditions deteriorate. So as the momentum shows dropping numbers, and as we drop into lower tiers, right, where we move into I'm slightly bullish, I'm neutral, if our score turns negative, right, as those things happen. Part of an offshoot of our market posture is sector rotation. So you can see we're looking more at sectors like materials, industrials, possibly energy. And that's already open for business, John. We don't have to wait for a negative score. Once the momentum hits a tipping point where you're like, okay, like I think I even said, hey, I'd start being comfortable with downside trades as early as a week or two ago. So it's open as it deteriorates. You're saying, hey, this thing is in a bad enough place that I might, if I see a stock that makes a little upswing, well, you don't have to look for downtrends. They're starting to show up on your watch list. Right? There's one right there. It's already shown up. So you might be like, hey, I'm going to actually pull a trigger. Also, we actually did run a bearish search the other day and started talking about what would it look like for us to start wanting to. So if you're interested, come to Tuesday night and we'll do that again. Let's talk how do we look for downtrends? How do we establish a potential bearish watch list that we want to stick a few things on that we're looking for to the downside? Absolutely. But a lot of times the things that rallied up are now the things that are going to move down. So I'm not looking for defensive things to be bearish. I'm looking for growth things to be bearish. I'm looking for consumer discretionary and technology to lead the way down. That's where a lot of the money is found right now to sell. Yeah. So if you're kind of feeling froggy that way, it's okay to start jumping. Any other questions, comments, concerns before we go? Good session. Yeah, good session. Let's see what this week brings. Close tomorrow. I'll see you guys Tuesday. I'll make sure I get that meeting updated, so look for the email, and we'll go from there. So thanks, everybody. Have a great rest of your Sunday. Enjoy your day off tomorrow if you have it. Enjoy your day at work, even more so if you have it. And as always, happy trading.